Hi, welcome. Let's check what happened yesterday at US. Fed cut interest rate by 25 basis point, which is exactly what 97% of the market participant wanted. But after that, S&P 500 fell erratically. There is the largest fall since March 2020, and it erased almost $1.8 trillion of the market capitalization. The 25 basis point cut marked 100 basis point of cuts in 2024, continuing the Fed pivot. But market sensed the Fed decision well before they announced. But in reality, today's market reaction had nothing to do with the Fed decision. Rather, it was about Fed outlook for 2025, which shifted sharply in the hawkish direction. As what Fed actually what it has done, Fed has revised their 2025 outlook from 3 rate cuts to 2 rate cuts. That is a total of 50 basis point cut. Meanwhile, the Fed raised their PCE inflation expectation from 2.1% to 2.5% at the end of 2025. Furthermore, Fed didn't stop there. They now see inflation at 2.1% at the end of 2026. That is slightly above the target, that is 22%. That was the target. Actually, this clearly shows that Fed has acknowledged that inflation is an issue once again. In fact, 3 months annualized core CPI inflation is now back up to alarming 4%. Core PCE inflation is trending back towards 3.5%, and PPI inflation is also on the rise. All these issues created panic at the US market, and it dragged the market there, and that because of that we saw the panic in our market also. Let's see what happened in our market. Nifty opened gap down, but after that gap down, Nifty was trading for the rest of the session with stability. One more thing, Nifty did not move more than 100 points from the opening level. Even though today was an expiry, there was no much volatility. Moreover, that expiry also was very stable. This shows most of the intraday players were not actively participating in today's market. For the past few days also, the market participants were very limited, and you could have seen that options volume has come down drastically. If you take at the stock, TCS was very volatile. On the other hand, Reliance was keeping on falling. And when it comes to the bank stock also didn't perform well. That might be due to that Fed rate decision. On the other hand, the rupee is also creating a new low. And furthermore, Reliance not good, TCS and Infosys are not good, and most of the cash stock didn't perform well. Only ITC was performing well today. And if you take FIS data, FIS were net sellers for 4,000 crores. On the other hand, domestic, there were 4,000 crores buyers, but there was no use. And if you take at the Nifty movement, this month Nifty opened at 23,900, and from there it went to 24,850. After that, Nifty saw one correction, it came back to 24,200. And again it went to 24,800. Last week and all it was around 24,800, and again it came down, and it made a low of 23,900, nearby 23,850, 900 levels. If you consider this month is one of the very volatile month on the intraday basis, but close to close there's no much movement. If you take the intraday wise, this is a very volatile month, and from the trader point of view, this is not a good month for both positional traders as well as intraday traders. On the lower side, the 23,800 is going to be a good support for Nifty. Even though the market has come down, technically the market is under the bullish grip only. There is some hope of recovery. We can maintain this hope until Nifty breaks 23,800 and close below that level. Even though that Nifty spot closed below 24,000, if you take the Nifty future, it closed above 24,000. That is, we can console ourselves with this 24,000 futures rate. Yesterday, due to that Fed decision, US market crashed heavily and Nasdaq fell almost by 1,000 points. If you take about individual stock like Tesla, it fell more than 10%. But now that US market is trading very stable, we can expect our market to stabilize in coming weeks. Now let's go to the technical side. This is Nifty daily time frame. 4 consecutive days Nifty was falling. Today's fall was around 250 points. If you take at the indicators, all indicators are also in the negative zone, and Nifty has come down below both 40 days as well as 100 days moving average. On the bottom side, 200 days moving average seems to be a support for Nifty. And if you take the other stocks like ICICI Bank, Tata Motors, apart from that Nifty, Bank Nifty, all charts are similar to Nifty. One thing, there is a big gap between yesterday's close and today's close. So to fill that gap, we can expect a small uptrend tomorrow. After filling the gap, we can expect a fall in the market. So don't keep any open position until you get any clear trend in the market. As I told, 23,800 seems to be a very good support for Nifty. Unless 23,800 is broken and closed, you can expect some sort of recovery. If the 23,800 is broken, the next immediate support for that for Nifty is 23,750 and 23,620 levels. Below that, you can expect Nifty to come to 23,300 levels. On the higher side, if Nifty crosses 23,990, you can expect Nifty to touch 24,050 and 24,120 levels. Thank you.